Hi, everyone. Welcome to another edition of Your Money Radio. Danny Stewart has joined us. Hunter Mazingo, Don Vandervoort, Alex Katutis. I got it right that time, didn't I, Alex? I feel like I got that really, like I nailed that right there.
Nailed it.
Awesome. So listen, Stockers, market lovers, love having you back as I try to find where my people went. Where I've lost the video. This happens to me every time we start the show. There you guys are. So Hunter. Guess what has happened, Hunter?
I have a feeling I know where this is going.
Big freaking news. Look who's back, baby. These cards are on fire. I went and checked eBay last night. Carson Wentz gets traded to the Colts. And let me tell you something. His cards are in fuego for our Spanish-speaking audience. And so now, Hunter, during the show at some point, I got a couple. I've got the Carson Wentz starter kit. I got like, I'm the Hunt brothers with silver with Carson Wentz. So we're back in business, baby. But here's the thing, Hunter. I don't do the DraftKings. I don't need that stress in my life. Like, I don't know why I feel like that little piece would actually throw me over the edge. But like the markets, they cause me enough agita, right? And so over the weekend, I don't want to be worrying about the 23-leg parlay that I would be surely to put on for $5, hoping to hit for $1 million. So here's what I want to know if you can find during the show. Are there odds for comeback player of the year 2021 Carson Wentz?
Oh yeah, there is. I don't know exactly what platform would have it.
Can you find that during the show?
I'll see if I can find it. They may not have updated odds yet, but I know at some point over the next 3 or 4 months they will.
Because we don't give stock tips, but I give Carson Wentz tips. There is no rules against Carson Wentz tips. And I'm going to tell you something. Comeback player of the year. I don't know what that acronym is. Like comeback. You know what? Too hard to figure out right now. Carson Wentz, comeback player of the year. Now, my dream scenario is because I started the Jalen Hurts starter kit as well, is that it's a Carson Wentz, Jalen Hurts grudge match Super Bowl. Colts, I don't know who Santorini. Is that the guy that the Eagles hired? It doesn't matter.
I think so.
Yeah, let's get the guy.
Well, Santorini may be a place in Greece. Maybe it's the same.
Well, what's the song? I don't practice What's the song by Sublime?
That's Santeria, I think.
Well, Coach Santeria. That sounds. What is Santeria? What is that?
I don't know. It's a great song though.
That's a religion where they slaughter animals, I'm pretty sure.
Well, we have done damage to Eagles. Let me tell you that much last year. So let's just get a Santeria, Frank Reich, Carson Wentz, Jalen Hurts Super Bowl. So my cards peak. Now, I don't need Carson Wentz to necessarily go to the Super Bowl. I need comeback player of the year. And I'm sitting on the Bitcoin of cards is what I'm doing. And so let's go, Carson. So
all right, I'm looking right now.
Yeah.
And I can see when the odds were issued for last year. But currently there are no odds available for this upcoming year. It looks like we'll probably start to see those odds maybe around May once they have a good idea for who's on what teams and that kind of thing, but no current odds. But I would bet Carson Wentz will be in there. I mean, maybe plus 1,000, plus 1,500. I don't know.
I'm taking that all day long. I don't even know what you just said there, but I'll call you before I download DraftKings, but I'm taking that all day long because that plus 1,000 sounds important.
Explain that. Explain what that plus 1,000 plus 1,500 means.
All right, so plus 1,000 means essentially you 10x. You bet $100, you win 1,000. So if it's plus 100, you double your money. If the odds are even, you basically make what you bet. And then if it's minus 100, it's essentially a 50% decrease on what you bet. So if it's, or not minus 100, minus 200. Sorry. So, but anyways, it's basically just think about it as every step up in positive 100s is another increase on your money. So that's essentially what it means. And as you do parlays, they essentially put those together and calculate the, I mean, I'm sure it's just a probability distribution where you're calculating the odds of all of those events happening at the same time, massively increases your payout because it becomes severely less likely.
I would do that parlay. Carson Wentz comeback player of the year, Jalen Hurts, MVP of the National League of the NFC. I would do a parlay. I would do something so ridiculous that if it hit, I would make Darren Ravel's Twitter feed.
I honestly think Wentz as the comeback player of the year is a completely reasonable bet. I've a lot of my
I'm no Carson Wentz fan, but I would agree that it's very good. Because if anybody's going to fix him, it's the guy he had his good fortune with, and that was when Frank Reich was the offensive coordinator, quarterbacks coach with the Eagles.
And they have a good offense, or Carson Wentz will have a good offensive line for the first time in his career, and he's got
a running
one of the
game.
better running backs in the NFL. Yeah, so it takes a lot of pressure off of him. And somehow the Colts were able to essentially get him for very little in regards to their draft picks. So they're gonna still have a first round pick and possibly be able to pick up a receiver for him too. So I like it.
Who ranked the contract? How did the mechanics of the actual contract go?
They take over.
Yeah.
For the remainder of the
Eagles took a cap hit. The Eagles took a $30 million cap hit, but Mark from Buffalo is convinced that the Super Bowl goes through Buffalo, and I just need Carson Wentz to win comeback player of the year, throw like a gazillion touchdowns, negative interceptions. So that's what we need right here. But speaking of 10x in your money, which is kind of a dangerous intro. We got a lot to talk about, Stock Market Market Lovers. It's a really packed show. We're talking about Art, Kathy Wood, going to talk about Bitcoin. Man, Don would tell you that people are getting scammed in a Bitcoin ETN. We're going to talk about that. Hunter's got some research. Alex has got some research. And then Don will do a little 21 over 21. But I want to show you something that gets you out of your own. I talked about it last night. So very briefly, if you haven't seen it, I just want to getting yourself out of your own way. I'll ask the fellas for some things that are breaking down here in a second. So I did a screen last night, and I've got it pulled up here. I didn't take it off the screen from when I finished the video last night. And we will run through it here real quickly. And so this is AAL, and when you're looking for stocks above the moving averages, and so 8, 21, 34, 50, I kind of like to screen backwards. And so some things are breaking down in the market, and instead of, everyone's done it, where you've chased to the downside. Is that a phrase, Danny, that people do? Like they follow a former leader. And I'm trying to think of a former leader. Can any of you fellas give me a former leader?
Facebook, an easy one that comes to mind.
Go ahead. Oh, there's not, Hunter? I got Facebook.
No, I just said Zoom. I'm sure there's people buying Zoom after the peak.
Oh, yeah.
Bottom fishing.
So yeah, so that's a pretty good peak right there, and it kind of doesn't make sense, right? That you would, like, everyone's on Zooms. Don, I think you were the one who said Zoom is like Kleenex now, right? Where it's just a generic term for a video interfacing platform. Is that correct?
Yep.
Yeah. And so kind of like Escalator was actually a trademark name, but everyone just called it Escalator. So the stocks that pop out, and I know some people are probably into AAL already, but the things that pop out to me, I might not necessarily be looking at, because I don't, if I don't know where the money flow is, I default to this screen. And a lot of people have asked for it. I'm more than happy to send it to you. Just email me. But you can run through a screen that just screens for, it's called the moving average stack, where the 8's above the 21, above the 34, above the 50. And it'll show you, like Airbnb, and this is an Alex pick, right?
Yes.
Alex, you're with me? No?
Yes,
you can't hear me? Okay.
I didn't know you were asking. Sorry.
It's a radio show, Alex. You got to talk. You gotta, fill in the blanks.
The best is when you get it from.
Don't feel bad about me beating you up. When we first started doing Don come on, and Tim had asked Don a question, and he'd go, yes. Or he'd go, just follow the charts. And I'd say, Don, this is radio. You got to extrapolate. You got to entertain. Talk about it.
So what's your question?
We didn't mean to wake you up, Alex. It's okay.
I thought he was making a statement. That's your pick. Yeah, it's my pick.
Well, here's when he ends the sentence with a right and his voice goes up. There's a question mark at the end of that, and if your name is mentioned in that sentence, he's looking to you for comment.
Yes, that was my pick.
So I think you added this you added it last week? Is that right?
That was a smart pitch, and he just struck out.
That's all right. That's all right. Alex is just getting used to the flow. So look, 21 yesterday. Now I grant you, this gapped up today, and we only did that video last night. But there are so many people, and look, everyone does it. It's not. I'm not saying we're agnostic here. Like everyone brings an opinion to the market about what is supposed to be happening, what could be happening, and when I want to get myself out of my own way, I just start running through a screen of stocks above the moving averages, and I can quickly see what's holding up price-wise, what's not, what's taking place, and like oftentimes I'm just surprised at what is absolutely working and what's not. Like Adobe here is not working, and so I explained that the screen doesn't always nail the stocks above the moving average, but here's ADI, and as we talked about last night, a lot of this you'll see is chips, ag. And it's 425 stocks deep, so we're not going to really go through any more. But it's going to identify the stocks that you don't have to rush out and buy. That's not what we do here, unless it's Carson Wentz cards. I need people to bid that market up big because he's going to be comeback player of the year. But it's a way for you to identify where money flow and potential leadership is heading. And I don't know if there's any stocks like, look at this ADS, stocks that are breaking down. Give me another stock that's breaking down that was just a leader recently. It's right, because we only track the leaders. That's the thing. Yeah, I'm with you. Zoom was a good one. You said Facebook, Alex. I can't remember when Facebook was a leader. End of last year, right?
Yeah.
Yeah. It's just not working. And so this screen, more than happy to send it to you. The video is right here, and it'll be below Don's really good 21 over 21, which is another way of finding leadership. That's the whole idea, is to find what's working. It removes your opinion, and now your mind is free to pursue those ideas, because it might be hard for someone to pursue an airline in this environment based on everything you see on the news. And okay, they seem to be holding up, and the indices are just treading water. So there is some kind of rotation taking place right now, and you want to be able to spot that, and that's one of the ways to do it. So that's all I wanted to share there. But Danny got a really interesting email over the weekend. Is that right, Daniel?
3 days.
I think so. Yeah, sometime. And I've got it on the screen here. Look, when you guys send us, when people send us emails, text messages, or however you get a hold of us, instead of us paraphrasing, I've decided, now we started last week with Uncle Tony's ATR discussion, just show you what the person wrote. We don't need to give you the name unless we have their permission and they want to be a part of the discussion. But we want to show you what they wrote because we want transparency. We're not here to purposely omit things. We're not here to shape an argument that makes us look good. We're here to actually present you factual information that you potentially could take action on. As champions of the individual investor, that's absolutely what we do. And so real interesting email here that came up. In case you're listening on the podcast, not the video podcast, and you can't see it, I'll read it to you right here. In many of the videos, Kathy Wood, ARK, is often brought up. Maybe I'm wrong, but I think as an explanation why a stock moved as much as it did, maybe as a confirmation of what your team is buying. Looking at, not sure if this might be a concern for your team, but some viewers may believe their best bet is by putting their money in one or more of ARK's funds without recognizing the value that you and your team bring. They likely wouldn't get with ARK. Do with the thought as you think best. Thanks for doing what you're doing. Now, what I think best is sharing that thought with everybody because I think there's a lot of people that will performance chase. We just discussed performance chasing at the end of 2020. Daniel and Don, I know you both have opinions on this. Who wants to go first? Let me bring up.
It doesn't matter to me.
Yeah, I replied that he was exactly right about the value that we provide, and ARK funds are a great way to participate in a growth uptrend, and a terrible way to lose the money that you made in that uptrend if you stick with them during a downtrend. Because during the COVID sell-off. ARK K was down, and the S&P was down 34% in 4.5 weeks. The NASDAQ was down 30%. The ARK K fund.
I'm pasting your reply right here. Keep going. I'm sorry to interrupt you.
Okay. The ARK K fund was down 46%. The ARK W fund was down 44%. The ARK G fund was down 37%. And the ARK F fund, I'm saying funds, but they're ETFs, was down 39%. So you don't have a sell discipline with ARK funds. You're going to give back your gains that you made during the uptrend.
There we go.
Just like a stock, there's a time to own it and a time not to.
So Don, I got it on the screen. Can you just run through it one more time? I apologize because I want people to understand that this is during the March timeframe.
Sure. And Tim added something I didn't mention. Grotection was down 8.2%. That's the value added by Revere. Our stops get hit, we sell. We get you out of the market. So Grotection down 8%, S&P down 34.5%, and the ARK funds down between 39 and 46%. It's not, and it just gets back to what I say all the time, and the point I hit home every time I do a webinar. It's not how much you make, it's how much you keep.
Realized versus unrealized, baby.
That's absolutely right.
So just to kind of paraphrase, in full disclosure, that actually is a client. He's a client. He was basically, he's very, very happy and content with what we're doing. And he basically was sending us an email saying, look, because in the last 2 months, for these new listeners that don't know what we're talking about, to put it in context, basically we were talking about these ARK funds because the woman that runs it, she's very sharp and she picks out the leading stocks, right? She picks some of the best stocks. In an uptrend, they go up more. So when it's in an uptrend, and one of her big holdings was Bitcoin, and there were a few others, she was doing really well. And there were a lot of some of the overlap of some of the things that we're doing. And so anyway, we were talking about her because she was being talked about in the financial media because everybody was, gloating over her. And he basically, this client was saying, look, you talk about her so much. I'm worried that, maybe some people think, well, why use Revere? Why not just go to buy these ARK funds? And so that's when Don put those things together about when it goes down, it goes to hell in a handbasket, those things get clobbered. And it goes back to what most people don't realize, because I told someone that was talking to us, thinking about coming on board a couple of days ago, we were talking about leading stocks. He said, well, I just would buy these. And I told him, I said, in a bear market, the average leading stock drops 72% from its high. And that just shocked him. He was not aware of those stats.
That doesn't even have to be a bear market, though. That's just a leading stock.
Could be from that leading stock too. Fair enough. Right. It could be that stock is run its course. And by the way, folks, here's the other thing that most people don't realize, and Tim alluded to it, but I didn't want to gloss over it. So just because a leading stock is a leading stock in that uptrend or in that particular rally for that leading stock, like Tim said, it doesn't necessarily have to be an uptrend. The next cycle, once you get a correction or a bear market or whatever, the next cycle, it doesn't have to be a leading stock anymore. Now, most leading stocks will last multiple cycles, 2, 3, 4 cycles, maybe more cycles. But at some point, they're no longer a leader and you've got to change them out. Think about in the 90s, you had Dell, you had WorldCom. WorldCom went bankrupt. You had Dell. Michael Dell had to take them private. Cisco Systems was a dog. Microsoft was flat for 14, 15 years till they finally got rid of the old CEO, the old guard, and brought in the new guy that really turned it around. And so Microsoft now is a much stronger stock than it was for well over a decade. So you can't just sit there and you can't get lazy, and you've got to know when to sell. So this ARK ETF, they've got to be, they've got to have stocks. They can't move, at least I don't think she can, or it looks like to me she's not. They're not going to move to 50, 60, 70% cash or throw on hedges. And most funds can't. They simply can't.
That brings up 2 points now that you just said that. The common thought is that when stocks go down, they're on sale. And, you only know that statement could be true in hindsight. And so, you know, it's interesting because hindsight plays havoc. I think it wreaks havoc with the psyche. How many people would love to have bought Penn at $4 a share? And you see where Penn's trading at now. And you just imagine, and you always leave this little detail out. I would have thrown my whole retirement in Penn or XYZ stock or Silvergate or Riot, Blockchain Riot, right? As we were looking at Blockchain Riot before we started the show. And the truth of the matter is what happened in March, in the Marches and Februarys of 2020, and I don't think that's going to happen again. We talked about that with the money supply last week. You pay us to sell. The old adage that I realized like maybe 6 months, a year after I came on board with Danny, I just walked in his house. I said, "You could pay us to sell." And in a bull market, you absolutely have to be involved. Like you cannot be on the sidelines. You can't be Peter Schiffing this market, where Peter Schiff constantly talks up gold and then he talks down Bitcoin. And Bitcoin's at 50. What's Bitcoin trading at this morning? 53,000.
55 now.
Yeah,
There you go.
that's what I'm saying. More than that.
55,000. Yeah, Bitcoin's trading 55,000. Whether you believe it or not, whether you think it's real or not, if you're the person that always says price is truth, you know, stick your chest out, price is truth, you know, well then how is Bitcoin not real price? How is Bitcoin not real truth? And so in a market like this, you have to participate to the upside. But what happens is when you start pulling back significantly, like we did, I think like stock and ETF was maybe down 5 to 6 or 7. It doesn't matter. It's single digits. If you keep your losses to single digits, that's easily overcome. But if you take, I mean, how much, Don, did she have to make? Or not Kathy Wood, but she's got portfolio managers. If you're down 45%, Don, how much do you have to regain just to come back to even?
Well, 50 is a double, so it's you would have to double, so that's 90, 80, 90%.
Let's just pause there. You have to come up with 80 or 90% from that point. What's taken place over the last 365 days is not the norm. Now, maybe it's the new norm, and you'll look back on this and go, boy, 10 years ago, Tim was dumb. This is the new norm. But it's interesting to see, and we see a lot. I talk about the psychology of investing a lot on the videos that I do, because it's interesting to see, like Danny, can you restate the question from a prospective client again? Why don't I just buy the leading stocks and sit in them? Is that an honest paraphrase?
Look, it goes back to you know, Wall Street and even the regulators.
No, hold on. Just was that the paraphrase? That's all I want to know. Was that the question?
Yes, that was a paraphrase. But here's one thing. People say they have a moderately, you know, their risk tolerance is moderate or moderately aggressive. And the problem is that's all fine and well, and you can say that theoretically, like you believe that, and you actually believe it. You're not lying, but all of a sudden it hits the fan and you lose 40% of your value or 45. If your $500,000 goes down to 250, you are lighting your hair on fire. You're freaking out. People will not sit through that. They will hit their pain threshold. And that's why it's about the risk in the market itself or the stock itself. It's not the risk of the client.
And I think when I bring this stuff up and we talk about it this way, I think it almost sounds like sour grapes. Look, folks, we are participating. We're not shifting this market. That's a new verb. You can shift the market where you just talk down. The more Peter Schiff talks down Bitcoin, the higher the damn thing goes. You know, so keep doing it, Peter. But you can't. There's going to come a point where. I don't know. Like, I honestly don't know how far they'll let the market fall before they inject it with more money. And we talked about that last week, that the pullbacks you see on this monetary chart actually coincide with pullbacks in the market. And those are this is just December of 2020. And the end of December of 2020 was pretty tough. And the monetary supply And to give you a relay, the monetary supply tightened, Danny, this much, just this little tiny bit, and the market just went, no, I don't like that, and the leading stocks wanted to pull back, and so right now the elixir to the markets is money. The more money they inject, the better it is right now for risk on assets. And I don't know when that ends. I don't want to debate it with you right now, but I don't think Danny thinks it can ever end. Is that true?
Well, they're actually going to inject another couple $1 trillion. I was reading some. Yes, that's true.
Okay, that's all I need.
Reading a balance sheet, man. It's
all I needed. And so to put a bow on this right now, and then we'll move on to something that is really important to talk about in addition to this. So right now, if you look at the S&Ps, there's nothing wrong with this chart. Like, this is a bullish consolidate. Oh, come on, charts. This is a bullish, if I can show you the chart, no idea why it's doing all that nonsense. There we go. This is a bullish chart. There's nothing wrong with this chart. Maybe it won't be a bullish chart soon. I don't know. But the fact that the indices are treading water, and there's rotation. When they trade sideways, there's rotation happening under the markets. And so you don't want to get stuck with the zoom. What you want to be able to do is not what Danny said, but not what the client said to Danny, just buy the leading stocks and hold them. That might work, but a lot of people forget how many times did Amazon have pulled back like 97%? Like, it was a lot. Like, it was a big number, and I forget what it is because I used to know it. I don't know it anymore. They forget all those pullbacks. And so while the indices, I mean, look at this chart of the NASDAQ. This isn't bad, is it?
And this conversation isn't exclusive to Kathy Wood's ARK ETF. So during 2018, we had a client that was constantly emailing me saying, my neighbor is telling me about all this money he's making in all these Janus growth mutual funds. And ironically, the neighbor stopped talking about those funds in the fourth quarter of 2018 when they dropped 35% in 3 months.
Oh, there you go.
And they lost 40% during COVID. Funds have to be in all the time per their prospectus.
So to tag along that, the point is, if you own pie chart of mutual funds, your job is to know when to sell those funds. You got to manage funds just like you got to manage stocks. Stocks and ETFs are just more easy, cost effective, and cheaper. But Don, you made a comment a year ago, and it's just still classic today, and we bring it up occasionally. Everybody goes, oh, these Vanguard, they're low cost. These Vanguard funds are very low cost. Vanguard funds are great as a tool to ride up the market and get beta exposure when it's going up. But when it's going down, Don's favorite quote is, it's a cheap way to lose money fast. And so even Vanguard, nothing's immune.
And that's why,
that's a good segue there. Cheap way to lose money fast.
And that's what we're going to, so just need the timing, Danny. We'll get Alex is a little bit better than you, Danny, some days on this radio program, and he's new, but we'll get there. We'll get there.
Got there a few minutes ago.
And that's why Don's 21 over 21, which he'll do tonight, which will be on the website. That's why screens are stocks that are above the moving averages. That's why those things are important, because they keep you from becoming complacent with this, this theory of that investing is easy. And there's going to come that day where you have the moment where your butt cheeks pucker and you're going to want to know what to do. And that's why I think it comes back to, people do pay us to, in fact, sell. They also pay us for this next thing. Equity erosion is happening right now in the crypto space. Don, let's pull up GBTC and talk about a new entrant to the market. Go ahead.
Sure. GBTC is it's traded over the counter. It's not on one of the it's not on the NASDAQ or the NYSE, and it's not an ETF, which means it can have a premium or a deficit to its actual underlying value of the Bitcoins that it owns. So GBTC, when you own a share of GBTC, you own a fraction of a Bitcoin. You take the price of it, you multiply it by the fraction of the Bitcoin. That gives you a reference price. You compare that reference price to where it's actually trading, and that tells you the premium or the discount. Right now, GBTC is trading at about a 10% premium, which means the actual value of the Bitcoins that it holds is 10% less. But they charge over 2% as their management fee. So to much fanfare earlier this week, a new entrant.
Before you get to the new entrant, why does the premium exist? Is it because of demand for the ETF?
Demand. This is the only game in town, if you trade on the US indexes, to own Bitcoin in a retirement account without actually buying the crypto itself, and you have to open a separate type of account to do that. Or trade in Robinhood. Anyway, from a institutional perspective, this is the only way to own Bitcoin currently without either buying futures or buying the crypto itself, and that's not integrated with Schwab and TD's institutional platform. So this is the only game in town.
Is it a closed-end fund or?
This is a closed. It's an ETN. Which means it's not a closed-end fund, which means they create shares all the time, but it can trade at a premium. It's not an ETF.
If you're GBTC, you don't want another entrant to come into the market, do you?
You don't, if the entrant coming in is going to be bought and bring your premium closer to NAV, or if it's going to dilute the ownership of GBTC. And that's what this new one, OBTC, that came in, its big story was we're only going to charge 0.49% annually, and that's great, but they brought it out to the public at $50 a share, while its underlying was worth about $14. So it had a 300% premium. And anybody that bought it the first couple of days between 50 and 60, it's down 47% today, trading at 22. Congratulations, you've lost 2/3 of your money. And it's because if you were ignorant about the price and just attracted to the shining management fee of 0.49%, okay, so you saved 1.5%. It's going to take you 90 years to get your money back.
Let's unpack all of that real quick. So OBTC is buying Bitcoin, is that correct?
It's buying Bitcoin, just like GBTC does, but they're doing it at a lower management fee.
I'm going to retrace some ground you just covered, but I really want people to understand this. And
sure.
You did it a little bit quickly. So there's no difference in the cryptocurrency between that they're purchasing at OBTC and GBTC. So I'm going to pause there for a second. And I'm going to say that a new entrant also means that there's more demand for the underlying commodity, because that's what it is now. It's a commodity. And that could be pulling up the price too. Is that accepted as supply and demand theory?
Yeah, the price of the underlying Bitcoin, absolutely.
Yeah, and I think you're seeing that. So the more of these that come online, the more demand is, and there's also other entrants coming into play. Pause there. Now, in real small words for people like me, small words, even shorter sentences, how in God's green earth, Don, now let me show you the price of Bitcoin right now at home, folks, as of 12 o'clock Central here in the frozen state of Texas. BTC futures are up over 5%, and you're trading 55,165. GBTC is up 8%, trading 57.22. OBTC is down 47%. So can you explain how in God's, because I think ignorant is in the truest sense of the word, not as, and you didn't mean it as an insult. People saw that and they're like, oh, this is apples for apples. How is it not apples for apples, Don?
I mean, it's hard to take the word ignorance out of the equation because you didn't understand what you bought when you bought this. If you didn't understand that the underlying was worth $14 and they were charging you $50, you know what you own, I guess. I mean,
Where
There
would
has to
they
be
have found that? I guess that's the thing. I think people
at the
might be-
website of Osprey Funds that brought this out. I blame Osprey Funds for this, for
Oh yeah, no,
bringing this out at 50
But that's
bucks.
what the
And
intent,
any
that's what-
advisor that took the bait from Osprey and put their clients in that should be fired.
You think that
Absolutely,
happened?
positively fired. Yeah, because they have to, when this comes out, they market it to people to put their clients into it. Absolutely. And then they also come out to try to get liquidity in it, and they make a private offering to people, and they say, we'll sell it to you at NAV, but you got to hold it for a year. So you can get trapped in, you can actually buy OBTC for 14 bucks in a private placement with Osprey Funds if you promise not to sell it for a year, so that they can build up their book and bring the liquidity into it. They absolutely screwed the small retail investor by pricing this at retail for 50 bucks.
So maybe instead of having some kind of crypto kitty guy testifying on Capitol Hill, we should probably look we should probably look into this, right? Like this is fraud. I mean,
this happened with ETHE when it came out. Grayscale runs the GBTC. They brought out 2 other crypto funds earlier this year or late last year. They also brought out ETHE and they brought out GDLC, and they both traded at massive premiums. And you just can't. You got to know what you're buying. You just can't buy something at a massive premium.
I don't disagree with you when you say you have to know what you're buying. I don't think the layperson would ever fathom that there would be this much premium difference. There would be this much between OBTC and GBTC. I'm not. It sounds like I'm defending it.
Well, I mean, but you got to think that Osprey knows that, and why?
No,
else would
Osprey knows that. I hold Osprey accountable for this. Ultimately, it falls to the consumer. What Don is saying, to know what you want. But I almost feel like this is a Ford Pinto situation. You bought the Pinto and you really didn't think the gas tank was going to explode if somebody hit you. I mean, that's a possibility. I don't know how this comes to market with such a premium and why the SEC would allow it.
Well, and there's also a point to be made that this action on the Osprey fund, I mean, you pointed out that GBTC is up more than Bitcoin today. This could possibly be leading more people to GBTC as it's more stable and a more accurate representation of what Bitcoin's doing. Now, granted, it's new, but the behavior of this going from 60 to 21 could potentially be pushing people towards GBTC, which would inherently drive up the premium.
This is by far one of the most egregious things I've ever seen. And when Don brought it up in a morning call, Tuesday, I think, or maybe it was late. I don't remember.
When I looked at the premium, I said, this has got to be a mistake. They can't be doing this to people. And I ran it by some trader buddies of mine, and they're like, no, that's absolutely what they're doing. I said, are you sure I'm calculating this correctly? This is a 300% premium. Yeah, it's a 300% premium. And it's most egregious because GBTC is an alternative to it. When ETHE came out, it was the only game in town. It was the only way for people to own Ethereum by using an ETF-like, yes. And the only way to own it and so, you know, still it would have been a dumb move to buy something at a 300% premium. It's like you thought you were buying a 2-liter Coke and what came to your house was a can of Coke. It's RC dumb. Cola. Even worse.
So I guess that's the point too, that you said you had to calculate what that premium was. The Osprey wasn't going to advertise that anywhere.
Well, it's on their it's on their webpage. It is.
But the premium normally will, with like a closed-end fund or an ETN, normally those premium and discounts will fluctuate some, and that's really what you got to know. It's okay to buy something at a little bit of a premium, 5, 6, 8%, if you're really bullish and you think it's going up. But
let me correct that. They show the price and they show the NAV. They don't show the premium on their website.
That's what I'm saying. Yeah. If somebody, it's kind of like a nutrition calendar, or like you go to the restaurant and they have to print the calories and the fat and stuff. Like I wouldn't know how to make that calculation, and I feel for consumers in this space, in this case, because it's just not.
Well,
just
it's
don't think you're gonna.
like a PE. It moves around. It's a PE.
This is getting fleeced right here. Like this is
Totally fleeced. And today is the day of reckoning. It took 5 days for it to happen, but today's the day of reckoning.
They didn't advertise, hey, this is a 300% premium. They don't want you to know that. It's almost akin to the cigarette manufacturers back in the 60s touting the filter is going to save you, you know, as they knew the filter wasn't going to save you. Osprey knew this was going to happen, but yet it shouldn't be allowed. Like there was this sham thing on Capitol Hill with people trying to explain tendies and YOLO and Hunter likes diamond hands and paper hands to average everyday people. This is actually what the SEC should be effing focusing on. Now, I gave up swearing for Lent, so I can only say effing. And I don't think that counts. Danny, did you give up anything for Lent? No, anyone give up anything? No. I gave up swearing, so I'm gonna try. Alex, you gave up something for Lent? You're smiling.
No, I didn't.
Okay. Your wife give up something for Lent? Anyone? No. Okay.
And
I already live vice free, so I mean, there's really nothing to give up, you know.
Don, lightning strike. We want you to be here, Don. Jesus.
Don, maybe you should give up exaggerating for Lent.
Why would you want to invite the Jesus to strike you with lightning just to make a point? This is egregious right here, and it shouldn't be allowed. Like, this is the stuff that you would, like, I don't think the layperson would see the bright shiny object that Osprey advertised of lower fees, and that's what they focused in on. And this is the exact opposite of what Revere stands for. This is the exact opposite of transparency. It's the antithesis of what's right. And I'm so incredibly frustrated by this. And I know you are, Don, and that's where you're coming from.
I got a question. On the other side of that trade, who's making the money?
Well, I mean, just the bid and the ask, like anything normal, but anybody that bought it is now 60% down.
I don't know if you can short this, but if you understood what Don understood, I'm a little embarrassed that I didn't do this now. If you understood that the premium has to, there's going to be this day of reckoning eventually,
right.
You just go in and short it.
Yeah, if it was borrowable, it was very thin, and it's still pretty thin. It's only traded 400,000 shares today. The first day it went live, it only traded like 80,000 shares.
But Alex, to answer your question, when you got premiums that outrageous, that large, you're going to have, especially on a thinly traded vehicle. Well, that's one of the reasons the spreads were so large. It adds to it is because it was thinly traded. Okay, the higher the liquidity, the premium should be more in line, more reasonable. But the higher the premium, the wider the spreads. The wider the spreads, the more the market makers can make lots of money.
And Don said too, if everybody who bought in at 14, they're okay. Like right now they are. Everyone who bought in at 14 are getting phone calls today that said, "Hey man, you got in at 14. It's all good." It's the general public that gets hosed in all of this. And then, look, I get it. Don isn't incorrect. Don is correct, where he's saying at the end of the day, the onus falls on the person buying whatever it is they're buying. But this is just egregious. This is saying that adding Olestra to Doritos won't make Timmy fat. And I'm going to tell you something. I ate those Doritos with Olestra, and they not only made me fat, I spent more time in the bathroom than ever. There's no diet cookies, man. Like, Snackwells are a scam across this country. They don't even make Snackwells anymore because people figured out it was a scam. Look at Aspen. What's this guy talking about? And I'm like, Snackwells, Alex, they were supposed to be sweets I could eat and not get fat. But I got fat.
I made the same mistake with the Lay's with Olestra, and I made the mistake one time.
Yeah.
Those were pulled from the shelf within months. That did not last.
They greased the skids of people internally so badly. They had, I mean, imagine that. Like, that was a crime against humanity.
What was this? What year was that?
This is probably
96?
15 years ago.
It was before you were born, Alex.
Yeah.
Yeah, they put something in there to keep your body from absorbing the fat. And if you looked at it, you were like, oh my God, this is great. I can eat potato chips and they're low fat now. And then you spent the next 3 hours in the bathroom after you ate a handful of them.
Oh,
Now,
gosh.
I will
I
tell
mean,
you.
you talk about grease in the skids. That's exactly that's exactly right.
I will tell
Yeah.
you that the OBTC of the food world right now is cauliflower crust pizza, because what the manufacturers are doing is they're putting like a speck of cauliflower into this crust, and then they're filling it with rice flour. And I'm going to tell you something: rice flour is going to make you fat. If you're looking for the alternative, it's Quest. Danny, what note are you taking down on this? Because I want to know if you're going to put greasing the skids in the email that goes out to people. What? Tell me exactly.
I'll probably pass on that. I'll probably pass on
Is that a hard pass, Danny? You're going to flush that idea?
How about OBTC, does the O stand for Olestra?
It stands for O. Is what it stands for. This thing's going lower. And I gave up swearing for lunch, so that doesn't count because I whispered it. And I don't know if Jesus hears the whispers, but I kind of mouthed it, so it doesn't count. There has to be a decibel level associated with the swear to count against my Latin agreement. And you have to give up something you like. And I like swearing. I feel like those words really make a point sometimes.
it. Makes you feel big. Hey, by the way, before
The
we
bid and
move
the ask for OBTC is 5% apart right now.
there's your answer, Alex.
And so,
5% apart.
Alex asked a question in there, and we've discussed Olestra. Alex, I'm sorry, that happens sometimes.
It's okay.
Hey, before we move on, though, I would like to make one other point, because GBTC, one of the ways, I'm just putting this all together, one of the ways they probably got this thing pushed through and were able to get around it, because there's other players that are trying to get okay by the SEC to have an ETF Bitcoin, right? That can own the actual Bitcoins. And that it's been kind of difficult. And there's a bunch already in registration, but they haven't authorized it yet. So an ETN is an exchange traded note. That's a promissory note from the issuer. Doesn't mean you can't own them. It just means you got to follow them and you got to track them like Don does. And you've got to just be aware, because they're not long-term buy and holds where you just stick them in your drawer. You need to have a sell discipline, because what they do is, so if you've got an ETN that's based on say the S&P or gold, well, it's more, whoever does it, Goldman Sachs or Barclays or whoever, they're just looking at the index and they're promising you to pay you that return on the index. That's just their what they're targeting. And then they charge a 2%, some kind of fee for doing that. But you don't actually own the underlying assets. So you've got risk of the underlying creditor being able to pay, the underlying issuer to be able to pay up when it's time to get paid. In ETF, on the other hand, you own the underlying gold futures or you own the underlying S&P stocks. So you actually have the asset. If the issuer to default, you would get that pro rata share of those funds. But that's one thing you've got to be careful of, because in the long term, if Bitcoin did implode, that GTN may come under a lot of pressure. Likewise, that's also how they probably got it through, because they don't actually have to own the Bitcoin.
Now, pause there for a second, Danny. Don or Hunter or Alex, do you remember what year it was? Because what Danny just said is exactly what happened to all the Credit Suisse VIX ETNs, and I think it was 2018 or 2017 in the summertime, where there was this implosion. There was this, I could just pull the chart of VIX up here. Let me just do that real quick.
Is it TVIX? Was that the quote?
It was.
I think I remember.
I forget what the entity was. Let's put it on a weekly chart here.
I think it was TVIX.
It was XIV.
XIV.
It was February 2019.
Oh, here it is. Right here.
A bunch of those ETNs went belly up in 2008 or the financial crisis.
This ETN discussion is very apropos to what Danny just said. VIX did this to people. People just got locked out. Like, remember, they were just liquidating, and you lost it all. Like people had, it was crazy what was happening there. Not suggesting in any way, shape, or form that that's going to happen with GBTC, that's going to happen with Bitcoin, but Credit Suisse they couldn't handle the risk anymore. And because and what happened was people were shorting the VIX, shorting the VIX, and then eventually it just spiked and it just got out of control.
Yeah, XIV was the ETF that was providing a very smooth uptrend. It was the complete opposite of the VIX. It was outperforming the indexes, and until February, early February, one day after the close.
So here's the last day it traded.
Yep.
So
that's a big candle right there.
Yeah, this is it was trading just north of 145 at the start of 2019. And then here's the week prior, trading somewhere close to 140. And in 1 week it went, I think they got you out like at the bottom. Like that's what can happen with ETNs. Or I guess in theory it could happen with everything.
Well,
I always wondered how quotes like UVXY still are tradable. I always thought that those should be taken.
They're not triples anymore, are they? They made them doubles?
Yeah,
UVXY is one, I think it's 1.5.
Okay.
But Tim, you made a great point. You said, I think they got you out at the bottom. Translate that in Wall Street speak. Well, you don't think we're going to pay you a lot of money. We're not going to pay you out of our money, which is really what that ETN is supposed to do. They're backing it. They're the backer. And it's just like when you have a catastrophe, the market, like when you have a big sell-off in the stock market, you can't get the market makers on the phone. They don't answer. They're supposed to create an orderly market, but if it's lopsided, they don't answer the phone. Just like on this ETN, it imploded, so they let it hit the bottom and then gave you pennies on the dollar.
The ETN, and a lot of this happened after hours, and like the market would close, and then all hell would break loose. And this was a really rough time in the markets. I remember this, but I don't. Who knows? It'll be interesting to see how all these products develop. But getting back to the point of OBTC, I feel awful for consumers who have bought this. I mean, down 48%. When the underlying commodity is up over 5% isn't even remotely correct. So I think we beat that up. You got anything else to add, Don? I'm sorry.
It's terrible. I mean, earlier this week, the worst thing I saw in a new client coming in was that their advisor had bought them half of the growth index and half of the value index. What does that provide exactly?
Yeah, discuss. No, I think you should discuss it. Like
it's them trying to look smart when it's exactly just buy the index. Why buy half the growth and half the value?
Don, that's all marketing. It's to give the illusion,
yeah,
the illusion of diversification and the illusion of safety. Guess what? When you hit a bear market like March, and go back and look on March 20, just go back and look at March 23rd of 2020. Look at the value and look at the growth. Yeah, the growth was down more, but the value was down pretty damn good too. You just got a basket of stuff that
there's nowhere to hide. You can't hide from that.
Yeah.
Well, isn't ExxonMobil a value stock? And look what happened to them over the course of last year. I mean, you saw gas prices or oil prices implode. I mean, so those are traditionally more value oriented anyway.
Yep.
Hunter, you're going to win today, I think. Either you or Alex, you guys are going to win show participant of the week. What a great segue, because that screen right here that we talked about at the beginning of the show uncovered a bunch of energy names that look fantastic. And but energy, a lot of people put their politics with their stocks. The money and politics are together, but energy is actually going up. There's a bunch of good. Alex, you got some energy stocks off the top of your noggin?
I was looking at Matador the other day. MTDR.
Ah, Matador. See, this is the beauty of the show. We don't rehearse it. I don't know where we're going, and I give it to Alex. And Alex, you're now show participant of the week. I've just taken it from Hunter. I've given it to you, and on my screen, you're right here. So I'm probably drawing a crown over some nothing on that you guys can see. But Alex, you win. Show what's Matador's ticker symbol?
MTDR.
Matador. Ah, okay, a little bit. Give me Apache's ticker symbol.
APA.
Yep. Like these are good looking charts. My charting with Thinkorswim today is all off. These are good looking charts. Don, give me an energy stock.
CVX, which
CVX,
according to certain people, Warren Buffett is a war criminal for buying.
And that's how he works it in. High five.
Oh boy.
That's an inside joke from this morning.
He could have bought Tesla and helped save the world, but instead he bought Chevron, and it's going to ruin his legacy.
I will
borderline criminal.
Don is intimidating the unflappable Ross Gerber from Twitter. If you want to look up old Gerbsy there. So yeah, like the Gerbs, you get yourself out of your own way. But now we have gotten, I like the interaction we're getting from stock nerds and market lovers. And I had a stock nerd, Hunter, your fan base has come back again. Now, before we do that, Hunter, I also want to let you know that I'm also at the same time going to place a bet on Nick Foles for comeback player of the year, because here's what I think. The Colts.
I don't like that one.
No. Hear me out now. The Colts know the recipe for success here. They're going to get Carson in there. Jacoby Brissett's going to go back to the Patriots. Nick Foles will be the backup in Indianapolis. And the Colts are going to the Super Bowl, baby. Nick Foles.
So the Nick Foles bet is your hedge in the event Carson Wentz gets hurt or has just a complete meltdown in Indy.
Right. And so
okay.
I don't know what it's got to be like plus 10,000 Nick Foles. Like I'd lay a hundo on that, right?
I'm sure. I don't even know if you'll be able to get odds for Nick Foles.
I think based on an earlier discussion, we can send it to PointsBet USA. They'll come back with something, and then we can figure out if we're going to see how I said we can figure out if we're going to take it. We could be a betting ETN, Hunter. Don't you see? There's no danger in ETNs.
Yeah, well, you might look like that VIX chart if you bet on Nick Foles to win comeback player of the year. So
that could be the trade that makes Hunter. Listen, that could be the trade. Who's the guy, the big short guy? He made his whole career off of being early or something, and then it worked out. Who's that?
Jim Chanos.
No, Jim Chanos wasn't.
He's been short Tesla for like 7 years.
No, we could be like Michael. Is it Michael Burry, Don?
Yeah, that's what I'm thinking of.
We could be like the
Michael
big
Burry
short
is the guy that was in the movie, but the Moneyball guy was the author. His name's escaping me.
Michael Lewis.
Guy that wrote Moneyball. Yeah, Michael Lewis wrote the book, The Big Short.
Yeah,
great movie, by the way.
The Big Short, Hunter.
Michael Burry was the fund manager in there.
We're the big long. We could if this trade works out.
The big long. You might want to put that one in the description for the podcast.
Is that your new nickname, the Big Long?
Sure.
Don't egg Tim on, Hunter.
That was too good.
That was too
good.
I think
after your nickname last week, the Big Long, we're just following it up, right?
Yeah, I think Meemaw would like the Big Long. Like that. We're so early to the Nick Foles MVP trade, but I think we're completely onto something. But I had I'll tell you what, this doctor, she's really amazing. She's teaching her young children how to invest, compound gains. I know there's a lot of people out there doing that, but her emphasis on this and the way she approaches it, I absolutely love, because she's just a super person, and she's a role model for a bunch of people. I know she's been a role model for her children, and we talk about it. She's really awesome. And she said, hey, with all the problems down here in Texas and some other states, what about GNRC? Can you have Hunter look at it? And she is a Hunter fan, GNRC. And so here's Generac. Yeah, I'm going to put this on a monthly chart, and I'll get it out here. And you can see that, yeah, and it's been one of the, I'll point this out right here. And look, we're on a month, actually, this is a weekly chart, pardon me. We're on a weekly chart, and the 21, the last time this touched the 21, here's 2019. Or this is 2020, I believe. Yep, 2020. There's 2019. And so the last time it touched the weekly 21, you know, you can see from that trajectory on. And Hunter, what do you got? Give me your thoughts on this. Hunter did some research for this person, and I think it's actually very applicable to a bunch of people this time.
Yeah. So I've got a bit on Generac as the company, but I also have a little bit on the Home Depots and the Lowe's of the world during times of natural disaster. Like, you know, I mean, not necessarily that it's a natural disaster, but it is. I mean, you guys Texas has been suffering with this freeze. And so if you can go back to August of 2017 on GNRC and look at what it did, probably the subsequent month and a half, and then even further than that, we'll look at Home Depot and Lowe's, who continue to do well. So that's Hurricane Harvey right there in, I think, about the middle of August through the end of September, or beginning of September was when it was really bad. And you can see Generac during that time pretty much went from about 35, 36 up to 50. And, you know, I mean, if you're familiar with what Generac does, or even what they did at this time, they make generators for backup power, which in times of hurricane, or, you know, whatever the case may be that causes the power to go out, a lot of people have to either buy those or they have to use those, that kind of thing. Businesses, individuals, it doesn't matter. Or even the people that are doing the rescuing and the cleanups, that, you know, they're having to use alternative sources of energy as well. So my point here is there's a case to be made that these companies benefit proportionally from natural disasters. And when I went in to look at what Generac does, so I'm just gonna read this off because I've got it written down here. And this is pretty much their entire book of their products here. So they make industrial power generators, business standby generators, mobile lighting and power products as well. They have obviously the backup generators, that's what most people are familiar with, and portable generators. But what was really interesting is they have clean energy called Power Cell, which harnesses power from the sun or the electric grid to ultimately reduce your electric bill in times of peak demand when energy prices are extremely high, or in times where you need backup power. So I thought that was really interesting, because Generac is actually somewhat a play on the clean energy space. And, you know, I think most people wouldn't really think that off the top of their head. But they also have an app where you can monitor your actual generators, their usage, how they're performing, all that good stuff. They make transfer switches, think of, you know, like breakers and things of that nature, pressure washers, water pumps, which are especially when there's all the pipes busting because of the cold out there in Texas, snow plowers, log splitters, stump grinders, etc. So what's interesting with Generac is they make a lot of the expensive, heavy equipment that you need in times like a hurricane hitting or being in a severe freeze. But could you also go and pull up Home Depot or Lowe's? They pretty much look pretty similar in this time frame, and look at the same time, pretty much the middle of August, really all the way through January, February of the next year. And you'll be able to see they also went on to really lead after that. So I'm going to pull it up on my screen too, just so I can look at it in real time with you guys. So I'm looking at Home Depot, and I'm going to go to about the middle of August in 2017, and I see they're right at about 150. Subsequent to that, in the middle of September on MarketSmith, what I'm looking at here, they hit RS line new highs, blue dots, handfuls of times over the course of September. Pretty much the whole month of September on MarketSmith is a blue dot for Home Depot. And then beyond that, by the beginning of February, they had gone from 115 to 210 almost, which, if you're familiar with Home Depot, it's a relatively slower stock. That's a pretty substantial increase for a stock like that. And Lowe's, you don't really have to pull it up, but Lowe's looks pretty similar to what Home Depot does here. So given the recent events, there's an argument to be made that this is going to benefit these companies now. And you can obviously see Generac has recently gapped up on earnings. If you look at the last 5 days, I mean, I think they're right around 360 right now. When they gapped up, I believe they were close to 300, pushed through it, and are now right slightly under 360. So anyways, I just thought that was interesting, going back and looking at a previous disaster in a similar area and how those companies benefited from it. Because you got to think, whether it's Home Depot or Lowe's or Generac, people are going to have to do repairs, whether it's an apartment complex or a huge, residential area, whatever the case may be. People have got to fix pipes. Exactly. Dan's over here calling the plumber. So, and it's a necessity. It's not like you can say, oh, well, my pipes are busted, I guess, I'll just kind of wait it out and I'll get it fixed later. I mean, it's something that has to be done now. And honestly, let me see if I can pull this up. I may not be able to. I'd like to go back and look and see what did Home Depot, Lowe's, and Generac's financial statements look like following that August through September timeframe. What kind of boost did they see to their revenue? What kind of boost did they see to their profits? And how unexpected was that compared to what their initial guidance was? So anyways, I thought it was cool. I've been watching Generac for a long time. It's an interesting company. And I mean, their RS rating right now is a 93. Now, granted, they just gapped up. They were kind of slower before that. But there's some merit to saying that Generac is the leader right now.
So let's throw it around. What's the strategy here now? Like it's extended, but it's consolidating. So what are you have any thoughts, Hunter? I'll let you start.
I mean, personally, I don't know if I would say I want to go make a trade, a short-term trade that Home Depot or Lowe's is going to, increase in price due to the fact that they're going to have a big increase in spending. And I did have a good buddy of mine who's in Alabama, where it's far less bad than where you guys are at. But they manage a handful of rental properties, and they're having to do repairs. Pipes are busted, and so they go to the Lowe's, and they can't get anything that they need to fix this stuff at Lowe's because they're sold out, and there's a ton of people that are doing the same thing they're doing. So, I mean, do with that information what you will, but Generac recently gapped up on earnings. I don't know if they're pretty extended. I mean, they're 20% above the 21, 40% above the 50, almost 100% above the 200. If I was going to do anything, I would look at Home Depot and Lowe's, but I mean, just quite frankly, I probably would avoid it. I'd rather own stocks like DraftKings and Butterfly and some of the companies I'm going to talk about today. But I do think if you're precedent, there is a reasonable expectation that they may see some kind of similar unexpected boost to their revenue and to their profits. So that's all I would say.
Alex, what you got?
Today, let's talk about Dexcom.
Do you have any thoughts on Generac before we move?
Oh, no, I don't.
Okay.
I think Hunter pretty much nailed it.
I do have some more stuff for you, Tim.
Let's let Hunter.
Sorry. Go ahead.
No, you can come back to me later, or it
all
doesn't
right.
matter.
So let's do some Alex. Alex, give me what you got.
Yeah, Dexcom DXCM.
Okay.
So I like it in this area. It's not extended from the 200-day. It's right around that 50. Almost looks like it's handling out here on a longer term chart. You could see a really long base. It didn't participate in the previous rally, so looking for new names to emerge out. The RS line's hooking up. That's a big technical signal for me that it could work. The volume also on the weekly on the right side of the base is showing a lot of accumulation over the last few weeks. And another thing too to note for our viewers is when you see a base like that, the reason it's being supported is institutions are supporting that. That's not retail holding that stock up. If that was the case, the stock would just keep falling down. It's going sideways for a reason because there's shares being accumulated over time. So that's another indication to me that potentially this could work. It's not extended. We're in a good bull market. We'll see. I like it.
Okay. What else you got? Anything else?
No, that's pretty much it. I don't want to put too many names out there because, like I said, we're kind of near highs. Got to be kind of careful with new names. You really want to pick a name that's not extended and is setting up to what, if you got 28 out of 35 boxes checked, yeah, buy. But, you know, if you're threading the needle and you're buying extended in this environment, your odds of success are not going to go that well. I mean, for me personally, the last few trades I've had haven't really worked out. So that's a sign that I need to press the brakes a little bit. And if I'm going to try anything, it's going to be something like a Dexcom. Gives me better odds.
All right, Hunter, what you got, man?
Yeah, will you pull up old ticker symbol BFly,
Hey,
butterfly?
Don, I think your mic is giving us a little static. I'm sorry. Yeah. B-Fly?
Yeah, and I just want to cover it again because on my last 2 Monday videos, I mentioned it. I covered it as long view 2 weeks ago, covered it
Do I
this
have the right-
past Monday.
I have the
or
right ticker,
I guess
right?
Tuesday.
This
Yeah,
is
that's
my,
it.
this
Well,
is my
I actually
charting
think
issue.
there's an issue with Thinkorswim where it's not displaying the chart correctly because you can see it's
Oh yeah, Hunter, they
26.51.
never got back to me. They canceled my ticket order for the response.
Yeah, I've seen people saying
Yeah.
the same thing on Twitter of, you know, what's wrong with my BFly chart, but I can see it fine, and so I'll
Sure,
just
talk about it.
verbally talk about it. So the reason I wanted to mention is they did break out this week. So the ticker changed, I believe, on Tuesday was the first day where you could see it trading as BFly.
Okay.
And then subsequently on the 17th, which I guess would be Wednesday, they were up about 17% and then up another 3% the following day. They were up nicely today, trading at the bottom of their range right now, but they've also had a really strong move. So I've covered this company in detail on, I think, my video 2 weeks ago. I actually cover what their product is, how their software correlates to their product. But the only thing I would say, and I'm not going to go through it in detail here because it's pretty lengthy and it's pretty high level software kind of thing. But if you go to their website, they've got the IQ Plus, which is the standard ultrasound, and it's a portable ultrasound company for those who don't know. It's a handheld ultrasound that connects with a smart device. It's a lot easier to use, a lot more convenient to use than rolling around, you know, the standard ultrasound system. But go take a look at on their main website page. They have, I think it's called the Butterfly Enterprise System, and look at what hospitals or healthcare places can do with this enterprise system, and then they have another tab that shows what it looks like without their system. And so their system centralizes things like image storing and record keeping and training, a lot of different things. So I think there might be a misconception, maybe not, that this is a medical device company that sell portable ultrasounds, but from my research, this is also a software company that can help hospitals or healthcare facilities, whatever the case may be, in a multitude of ways. So I just wanted to point that out because they have been breaking out. I actually added to it yesterday, I believe. Maybe
What's it
2
trading at
buys.
right now?
26.50 is pretty much what I'm seeing, right around there.
Okay.
But I mean, made all-time highs around 29 yesterday. Traded up to almost 29 today, and then it's kind of pulled back throughout the day, which the market has pulled back a little bit too if you look at the NASDAQ. Last thing, actually first, let me just I wanted to point out a couple of sectors that have actually held up. DBB and DBC, this is base metals and commodities, and more than likely you can attribute this to inflation and the inflation expectations. But they're holding up far better than a lot of growth names. Obviously, you can look at the chart and see that. And I just thought it was interesting. That's, you know, we had some inflationary data come out at the beginning of this week, which is, you know, more than likely a component of why the market may have sold off a little bit or why growth names sold off a little bit. But you can also pull up KBE. Banks have held well, and why would that be? Well, interest rates have been kind of trickling up, and
Yep.
you know, that bodes well for banks. And also, we covered it earlier.
It's crazy.
Pull up XES as well. Oil and energy stocks. This is oil and gas equipment. You could look at like OIH, you know, different variations of the oil and gas industry. But they held up better than than the market did for the most part, and they held up better than growth names did for sure. So I know we covered a handful of those kind of names.
That chart looks good.
Yeah, OIH has been, I mean, it's not super strong, but since the bottom, it is it's rode the 21 and it held the 50 most recently, and now it's back above the 21. The last thing I want to cover is good old DraftKings one more time. So I think I may have mentioned it a while back. They announced an expansion of their partnership with the NFL into Canada. Well, Canada is, you know, on the brink of getting their sports betting bill through. I think there was some further news on that today, but I believe I may have been Oppenheimer. I don't remember the exact group. Somebody came out and gave them a price target hike of 65 to 80, which might be, you know, some explanation of why they're up 5% today. But I do think it's interesting. DraftKings bounced off the 21 on Wednesday, broke it on Thursday, got it back above it nicely, reclaimed it, and then today back above the 8-day. So, you know, it's kind of what you want to see from a leading stock. I know they, you know, ran up to 65, pulled back. They do have earnings next Friday, I think, pre-market. But, you know, it's just, you like to see a stock that, and, you know, it sucked on Thursday because, you know, you're like, oh, it held the 21, that's great. And then, you know, Thursday rolls around and it breaks it, and you're like, well, this doesn't look good. But over the course of the day, you saw strength come in and the price got back above where it should. And today it's back above the 8-day. So that's just an example of, if as soon as it breaks to 21, you're ready to sell. Sometimes you got to let it just see what happens, because things will break the 21 or the 50 or whatever level of support you're looking at by, you know, 1, 2, 3%. But oftentimes leading stocks will reclaim it by the end of the day or by the end of the week, whatever the case may be. So that's really all I have for this week is my Generac stuff, Home Depot, Lowe's, and then a couple of sectors, and then Butterfly and DraftKings.
Good stuff. We're going to preview the 21 over 21. Danny, really quickly, take me over our normal. Let's do this normal outro stuff, Daniel. How can people get a hold of us? They got questions. You, Daniel, have answers.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor. Just go to our main website page, and right up there in the middle, that subscribe button, you can put in your email address, and you will get our daily market insights, short market video newsletter, 10 to 15 minutes a night. Very nice synopsis. Every once in a while, the guys will feel inspired. Or last night, you got a bonus. It was Don's Lunch and Learn, is hour-long live market educational series. He does it about once a quarter on Wednesdays at noon Eastern time permitting. And for that, you go to webinars. You go to the webinars link and sign up. So put your email in both of those places, but the subscribe button gets you our daily market insights, plus this podcast every Saturday morning. And we won't spam you. We won't reach out to, we won't bother the person in any way. You can also call us old school at 855-REAL-WEALTH. You can reach out to us with any questions at Dan@RevereAsset.com, Tim at Revere Asset, Hunter at Revere Asset, Alex at Revere Asset, or Don at Revere Asset.
And look, I like it when folks do this with me on Twitter here. Twitter for me is brevity. I like interacting with you on Twitter. It's easier on Twitter. My direct messages are open, so you don't even have to follow me if you don't want to follow. Just if you have a Twitter account, you can private message me right there. Danny is, I'm at TJ Razor. Danny is at Danny Stewart. And then this is where Don was, February 16th. So that might have been Monday. Here is, or Tuesday, D Vandenborg on Twitter. And look, we'll all interact with you on Twitter. It's so much quicker than email. But look, don't ever hesitate to call us. Look, whether you're going to become a client or not, we would love it if everyone who watched the videos did. But the thing is, if you call, you're just going to get your questions answered. And there's a 99.9% chance repeating that you're going to talk to America's fiduciary right there. So he is the best source of information and clarifying everything that we are saying. Don, let's get a preview of the 21 over 21. And then I've got one last thing.
Yeah, five or six of the 21 over 21 from last week broke the 21 this week. A couple of them have reclaimed it, and 2 of them have actually given great entry points off the 50-day moving average. So we'll talk about those and talk about a few replacements for the ones that don't survive the week above the 21 in tonight's video.
That's pretty awesome. And so that's what a lot of what we're doing here is just transparently trying to bubble up the names that maybe want to be a part of your watch list. You know, I'm fond of saying that these videos are for what, Daniel?
Your edification only, research only.
Yeah, that's exactly it. And so when Don's doing the 20 over 21, that is a really, it's a great place to start your watch list. And then I've gotten a bunch of requests. I'll send the screening tool. If you have Thinkorswim, you can have the screen. This isn't any special list. This is just the stocks that are above their key moving averages. And like Don nailed it. I just randomly scrolled down here to GWRG. GWRG. He talked about this on the GWRG. Talked about this on the podcast. What am I mistyping here?
GR.
Thank you.
There you go.
There we go. Don talked about GWRG. GR. I'm saying it wrong. That's my problem. Thank you. I'm absolutely positively saying it wrong. Don talked about this on his podcast, but he nailed the re-entry into it. And so if you take the things that we're discussing here, and you might not be familiar with Grow Generation, but having screens bubble up things to you is the way you grow beyond just the homes, the Home Depots and the Lowe's. You'll find the Generacs of the world if you weren't familiar with it. And instead of just Tilray or CGC in the pot world, you'll find the Grow Generations. And so that's what we're doing here. And if you want help, look, that's great, but there's a really good chance if we become your trusted source of transparent information, you know somebody that could, in fact, use our help. So with that, my fellow stockholders, market lovers, we love you so much for staying with us for all these years, watching our content's never been viewed more than it's being done now, and it's all because of you. So Danny, take us away.
Folks, we'll talk to you next week on Your Money.